Myself Aditya P. Tripathi. I am here to discuss on the topic of absorption costing today. In previous lecture of mine, I told you about marginal costing, cost volume profit analysis. We had a discussion about how to go for making a decision regarding different situations like make or buy, shut down or continue. So various decisions we took, but another aspect of marginal costing is that you have to compare it with the absorption costing. So we go for making a comparison between these two methods of determination of cost, these two methods by which we either determine the cost or we determine the profit also. So absorption costing, what exactly it is, that I'll be telling you. I'll tell you about the difference between the marginal costing, which is also known as variable costing, along with the comparison of it with that of absorption costing. Then we'll discuss about product versus periodic cost, what is product cost and what is period cost, what is inventoriable and non-inventoriable cost. That also you should know, because when we talk about absorption costing, we need to understand the cost which can be inventoriable and the other one which is non-inventoriable, and what is its impact when we go for calculating the value of inventory. Along with that, I'll tell you about the difference of profit between both the methods, that is marginal costing and absorption costing, because now you are well versed into marginal costing. So I'll be telling you first what is absorption costing, and then we'll apply the techniques of marginal costing as well as absorption costing in a single question, and we'll make a comparison that what is the difference between these two methods of determining cost or calculating profit, and obviously we'll be solving some practical problems. So with this agenda of today's lecture of mine, I'm starting with this marginal costing. What exactly marginal costing was, it is also known as variable cost. Marginal cost is also known as variable cost. Marginal costing has an alternate name called variable costing. So either I say marginal costing or I call it variable costing, they stand for the similar meaning. And in marginal costing, what we were doing, sales minus variable cost, contribution, and that contribution used to comprise of two things. One is the fixed cost, another is profit. Right, that was just to give you a recap. I'll be showing you a diagram also, but here let me first tell you what is absorption costing. We need to understand what exactly it is. So absorption costing, first of all we should understand the motive. What is the motive behind going for understanding another technique, another tool of calculating cost or profit when we already have in place marginal costing? The reason is absorption costing is basically used for external reporting. When we report to the public, when we report to the external parties, the external users. Say for instance, when we go for calculating the tax, when we go for calculating profit for the purpose of taxation, there we actually use absorption costing. We don't apply marginal costing there. So we need to first understand that absorption costing is something which is used for external reporting. So it is a kind of report, it is a kind of method which is being applied for preparing that report or that statement which is going in public, which is going into the public domain. It is not at all confined to the top management or middle management or operating level management. It goes to the outsiders. That is why we call it external reporting. Whereas when I say that variable costing or marginal costing, it is being used for internal purposes. So you would never find in an annual report of any company or any kind of in any kind of report of any company where company is coming up with sales, variable cost, contribution or profit. It is basically for the managerial purpose only, and it is for internal circulation only. Because at times my learners are asking me, sir, whatever you taught me in management, in management accounting, say for instance marginal costing, I could never find these kind of reports into the annual report of a company. And if you are not able to find it, is obvious, you will not find it anywhere. The reason is it is for internal reporting. It is for the purpose of management. So management is getting prepared these kind of reports for their own decision making process. So remember, variable costing or marginal costing, they are being prepared for internal reporting. It is a kind of internal reporting by the CFO to the top management so that they can make a decision. Whereas in absorption costing, what we do, we go for preparing the cost sheet, we determine the cost, and the same is reported to the external parties. But yes, of course, these two methods are different in the way we are preparing it, the way we are reporting it, the way we are calculating. There are certain differences. And when I say there are certain differences in terms of calculation of cost, obviously we may not find the same answer what we are getting from variable costing. So I'll be telling you why this difference is there. At times my students are coming in the classroom and they are reporting that, sir, marginal costing I could understand, but absorption costing is something about which I am always confused. So needless to get confused, because this lecture is going to clarify all your doubts related to absorption costing. So first and the foremost thing you must keep in mind is the purpose, the motive with which you are preparing this report. So absorption costing is basically, used for external reporting, whereas variable costing, or what you call as marginal costing, is used for internal reporting. This is for managerial purposes. So if you look at marginal costing, let me give you a recap. We were going for calling it as direct cost or variable cost as well. We were preparing a statement like this, writing sales, deducting variable cost out of it, and we were giving it a name of contribution. It could have been contribution ratio also when you are calculating ratio, CPU. Contribution per unit can also be calculated, or PV ratio can also be calculated. And after that, the moment you deduct or subtract fixed cost out of contribution, what you get profit. So this was the way we were preparing statement of cost or statement of profitability under marginal costing, which is also known as variable costing. So remember, you have to always keep this thing in mind, that either question will mention that you have to prepare statement of profitability as per marginal costing or variable costing. They stand for the similar understanding, the similar meaning. So marginal costing or variable costing, they are the same. Now I am coming to the absorption costing, that what is the difference between absorption costing and marginal costing. Unless you understand the difference, you cannot give your inferences, you cannot draw your inferences. What is inference? You have to give your interpretation, you have to give your opinion. That with the help of marginal costing I have prepared a statement, and the same with the same information I am preparing a statement of profitability or statement of cost as per absorption costing. Now what are the point of differences? As a management accountant, you have to draw your inferences, you have to give your valuable comment. So unless you understand the difference between the two, you cannot do justice to the task of interpretation. You have to draw the inferences out of what you have calculated. So for that only, I am first telling you what is the difference between the two. Remember that these two methods, these are basically different techniques. They are called as different techniques or methods for what? For estimating cost or profitability. So when I say absorption costing or marginal costing, these two have a similarity. They belong to a category of technique. These two are different techniques, and they are basically used for either ascertainment of cost or for calculating the profitability. So remember, either I say marginal costing or I say absorption costing, these two are basically categorized as a technique for ascertainment of cost and profitability. So suppose if you end up your statement at the point of calculation of total cost, it's a statement for preparation of cost, and if you calculate profit, obviously you are, apart from ascertaining the cost, you are also computing the profit. Now the question comes, this is the similarity. This is where they are similar to each other, they are identical to each other. Now what is the point of distinction? Point of distinction comes when we go for treating fixed manufacturing overheads. As the name itself clarifies, that in marginal costing we were looking for variable cost only, marginal cost only, whereas in this absorption costing we have to either get our fixed overheads absorbed or attached to a particular product or cost center or particular unit. So remember, this is the point, how to treat fixed manufacturing overhead. This is the point where absorption costing differs from that of marginal costing. So my dear learners, you have to remember this thing, that point of distinction is what? Where they are different, where we have to follow a different path when you have to calculate the cost or the profit. This is the point when you have to treat fixed manufacturing overheads. So if I am preparing statement of profitability as per absorption costing, I have to be little careful or vigilant about treatment of fixed manufacturing overhead. Now what is the treatment of fixed manufacturing overhead here? In absorption costing I will tell you what we do, and then eventually I will tell you what we do with this fixed manufacturing overhead if I have to prepare a statement as per marginal costing. So in absorption costing, if I have to say that what is the treatment of fixed manufacturing overheads, remember we go for considering total manufacturing cost or overhead. Either it is fixed or it is variable. Regardless of that, we take all variable cost into consideration when we have to calculate the cost of production as per absorption costing. So all variable as well as fixed cost, fixed manufacturing cost, they are included in the cost of production. And once you are including them into the cost of production, obviously the valuation of opening and closing stock shall also be made on the basis of cost of production. So it means in absorption costing, when I am computing the total cost of production, I have to keep this thing in mind that it comprises of not only variable cost but also the fixed manufacturing cost. So it is the sum total of, it is the aggregation of fixed as well as variable manufacturing cost. Remember, in some questions they term it fixed manufacturing cost, in other they may call fixed manufacturing overhead, fixed factory overhead, whatever it is. But remember, all fixed as well as variable manufacturing costs, they are supposed to be included into cost of production when I am preparing my statement of cost or profitability as per absorption costing. So in absorption costing, you have to always keep this thing in mind that while computing the total cost, not only variable but fixed manufacturing cost will also be considered, right? Whereas in marginal costing, what we do with fixed manufacturing cost, we ignore it, we don't consider it, because our method of costing involves consideration of only variable manufacturing cost. So only variable manufacturing cost, they are included in cost of production. We ignore fixed manufacturing overhead when I am preparing the statement of profitability or cost as per marginal costing. So this is a point of distinction. In marginal costing, don't consider fixed manufacturing cost, whereas in absorption costing we do consider fixed manufacturing cost as well as variable manufacturing cost. This is a point of distinction between the two. Now the question comes, why don't we consider the fixed manufacturing cost when I am preparing statement of profitability as per marginal costing? A very basic question which comes to us, that sir, why don't we consider fixed manufacturing cost in case of marginal costing, whereas we all know that fixed manufacturing cost is part and parcel of our total cost. So remember, they are considered as periodic cost, or we also call it period cost. They are basically known as period cost or periodic cost, and they are charged directly to the profit and loss account. So while preparing finalizing the final account, what we do, these costs, these fixed manufacturing costs, when I am preparing statement as per marginal costing, they are regarded as periodic cost or period cost, which are linked to the timing, and they are directly charged to profit and loss account. So always remember, we don't ignore any cost. What we do is we actually charge this cost, this periodic cost, to profit and loss account, and this is what management considers. Remember, at the very outset I told you marginal costing is being used for internal reporting. So when I am going for internal reporting, my CFO is reporting that sir, this period cost will directly go to profit and loss account in our financial accounting pattern. It will go there, they will take care of it. We have to only consider about fixed manufacturing, variable manufacturing cost. Fixed manufacturing cost will be transferred to profit and loss account because they are periodic cost or period cost. Now when I say period cost and product cost, or product versus periodic cost, we have to first understand what is the difference between the two. Because while having a discussion about marginal costing and absorption costing, this classification automatically comes. This word, intermittently we are going to use this word product cost versus periodic cost. Now what is product cost? We all know it is a cost which is necessary for production, but remember, it will not be incurred if there is no production. If production is zero, cost of production will be zero. If production increases, the cost of production or product cost increases in direct proportion to that production process. So remember, product cost is that cost which you are incurring when your production is on, whereas if I talk about periodic cost, in that case it doesn't happen. Product cost includes what? Cost of material, cost of labor, and some part of your factory overheads. Now when I say some part of your factory overheads, a question comes, which part of your factory overheads? Part of factory overheads which is not linked to any timing, which is not periodic, which is directly linked to the production. If production is there, that cost is there. If production is not there, that cost will not happen. So remember, it includes material, labor and some part of your factory overheads. Product cost, basically they are absorbed by, remember we are using this term, absorbed by or attached to the units produced. All product costs, they are always attached to the total number of units produced. So when I have to calculate the total cost of unit produced, I shall always always get my product cost absorbed to that unit of production. So if I say I have produced 10,000 units, I will never ignore product cost. I shall always consider the product cost, because it has to be absorbed by or attached to the units produced. So product cost is something which is common in both the cases. Either you prepare statement as per absorption costing or you go as per marginal costing, you have to always take product cost. Now question comes, what is the difference? Difference is we have to understand, we have to be vigilant about periodic cost. Now another classification, another name which is assigned to product cost is, it is also known as inventoriable cost. In some literature you will find inventorial cost, they call it inventorial cost, but basically it is called as inventoriable cost. Why do we call it inventoriable cost? Because this cost is considered while calculating the cost of inventory. So whenever you have some opening stock or closing stock, while computing the cost of inventory, we always consider the product cost. We don't ignore product cost, we always consider whether it is marginal costing or it is absorption costing. That is why it is known as inventoriable cost. Whereas periodic cost is known as non-inventoriable cost. I'll tell you why do we call it non-inventoriable cost. They are basically periodic costs. It is always said that if you talk about the trait of periodic cost or period cost, they are not necessary for production. They are standing charges. With the passage of time you have to pay. For instance, if you have to pay rent, if you have to pay salary to your staff, that is a standing charge. Whether you produce or you don't produce, you have an employee who is sitting, who is working. Employee will definitely demand for the work. If you don't have any work, it is your fault. Employee is coming at 9, leaving at 5. Definitely he or she will demand for their salary, their wages. So remember, periodic cost is incurred even if there is no production, cause that meter is on. You have taken some factory space on rent. That rent is always going on. That rent every month you have to pay. So no matter whether you produce or not, you have to pay the rent. So it is linked to the time period. That is why we call it periodic cost. Rent is paid monthly, salary is paid monthly, wage is paid fortnightly or weekly, whatever the terms and conditions are. So remember, periodic cost is a time bound cost and it is not directly related with the production. It is not at all linked to the production. Rent, salary of staff, they are always charged to profit and loss account, and that is why these periodic costs, they are not considered into calculation of cost, right? Administrative and selling and distribution overheads, they are known as periodic costs, because you cannot assign exactly that how much amount belongs to this product. That is why they are known as periodic cost. And remember, these periodic cost is also called as non-inventoriable cost. Having said non-inventoriable, I mean to indicate that while calculating the cost of inventory, we don't consider periodic cost, we don't consider non-inventoriable cost. So another classification of product versus period cost is, which has come to us, is inventoriable and non-inventoriable cost. So the cost which is inventoriable means product cost, you have to consider it while calculating the cost of inventory. Whereas when I say non-inventoriable, I am indicating towards periodic cost or the period cost, and that will only be considered, that will actually not be considered for calculation of cost of inventory. So to conclude, or to you can say summarize, I would say product cost is always absorbed by production cost. We always absorb it. It is absorbed by production cost, whereas periodic cost is transferred to profit and loss account. So product cost is inventoriable and periodic cost is non-inventoriable. This is something which you have to keep in mind whenever you are solving a question as per absorption costing along with the marginal costing. So product cost, what is that? It is absorbed by the production cost. Periodic cost, it is basically transferred to profit and loss account. Now what is different, to conclude? So in totality, what are the points of differences in terms of numerical? I would say, as compared to marginal costing and absorption costing, we consider total manufacturing cost of the product. regardless of its nature, whether it is fixed or it is variable, we take up total manufacturing cost. Remember, we only take total manufacturing cost. Office administration, selling overheads, they are not part of the costing. They are not considered for calculating the cost of production. So in marginal costing, you have to understand, in marginal costing we take up manufacturing cost, but that too only variable proportion, whereas in absorption costing we consider total manufacturing cost, which comprises of fixed as well as variable cost. Non-manufacturing cost, they are basically treated as periodic cost, and in both the techniques what we do, we don't consider. So either it is the marginal costing or it is absorption costing. Non-manufacturing cost, which means I'm indicating towards office and administration overheads, I'm indicating towards selling and distribution overheads. So if you have a look at the cost sheet where we were having a classification of prime cost, works cost, cost of production, office and administration cost, selling and distribution overheads. So office and administration along with selling and distribution overheads, they are not considered. They are basically not treated here either in marginal costing or in absorption costing. So here they are similar to each other. Marginal and absorption both ignore non-manufacturing cost, that is office administration, selling and distribution overheads. The only point of difference is that marginal costing considers only variable part of this manufacturing cost, whereas absorption costing says no, if manufacturing cost is there, if it is 20,000, out of which 15,000 is variable, 5,000 is fixed, I would take total manufacturing cost. So this was a basic introduction to marginal costing and absorption costing. With this understanding, I hope you have understood or you have clarified your doubts related to what is product cost, what is period cost, what is marginal costing, what is absorption costing. In next lecture of mine, I'll take you to some numerical problems so that you can clarify, you can practically understand how to take up these fundamental rules into numerical problems. So I hope you must have enjoyed today's lecture of mine. Thank you so much.